A $278 billion wipeout this morning. Why is everyone focusing on Nvidia? What information is required here? We are scaling up from our Blackwell revenues, which will reach billions of dollars in Q4. These sell-offs are, in my opinion, buying opportunities rather than a reason to fear. This report is no different from Nvidia, which is a completely different entity that operates as its own independent casino in the stock and options market. In response to tonight's earnings, Nvidia is predicted to move up or down 11%. We now understand that Jensen W is ultimately flawed, so it's a little more show me now. We didn't believe he was prone to mistakes, but now he is. Therefore, it's possible that some individuals believe we can't offer it that many. Give it a 30 multiple on a $5 number, and I don't think that's a significant call order. Why not? What the devil? However, I believe that when we learned that there were yield issues, we were all a little taken aback, David. It seemed to us to be turnkey. We were wrong to assume it was turnkey. There aren't any auxiliary businesses that were trading on eyeballs and having no revenue, etc., like there were in the 1990s. With a 100% increase in revenue and a 100% EPS, these businesses are incredibly profitable. They're outnumbering the street by tenfold more, after all. Right now, it's simply hard to keep up with what they're doing. I believe it is feasible. You know, Nvidia has experienced 30% drawdowns, nearly 8 times as large in the last 10 years of its existence. During those drawdowns, its PE, Nvidia's forward PE, was actually higher. The forward PE for Nvidia is currently in the mid-20s. In my opinion, this appears to be a typical profit-taking move. It may even push Nvidia back to the 1990s, but in 2 years, it will truly be a gift. Are you a buyer on the dip after considering all of these? Do you encourage those who read your work and hear you speak here and elsewhere to do that? Since we assume that there would be a 7 to 10% chance of a 7 to 10% drawdown between now and November, we are almost there. We have now dropped about 5%. We might be close to pulling for that full correction into September by next week, in my opinion. We're almost at the point, I believe, where I wouldn't be a seller here. The S&P's lower range, in my opinion, is 4,400 to 4,350. We're getting close. There is a lot of concern, so I don't need to add anything because I have a really nice position at Nvidia. However, I really like the price action of Nvidia going into earnings at the end of the month. There has been some technical damage, but since Satya Nadella, Mark Zuckerberg, and everyone else have urged us to purchase Elon Musk's chips, I'm fairly certain Jensen will show up and deliver it. Therefore, I believe it will be a very high number. At these levels, I believe that's a really good addition because I believe that at the end of the month, the market will begin a long, positive quarter. Before earnings, I like Nvidia at 109. My Nvidia score has been between 106 and 105. There seems to be a lot of support there. We're actually underweight Nvidia, which is rare for me, and we came into the day at 4.5% of Nvidia. I mean, it's what? Is it 5.5 to 6% in the S&P? So what I did is add to Nvidia and got it back up to about a 5.5% weight here. I don't think there's anything that we haven't already talked about, but the report was great. And I think right here we're just kind of working through the motions. A few months back, maybe by the end of the year, I think we'll be back above 130. I mean, the report was terrific because, well, the report had to be great. Yeah, the question is, was it great enough relative to the price action of the stock? How much it had elevated and the multiple? What would you do about that? So I actually had this conversation with Dan Ives right after the earnings report, and he reminded me of something that I think we all know, but we sometimes lose sight of when we get 1 quarter's worth of earnings. If you're bullish on Nvidia right now, you're not bullish because they're going to do 76 cents in the next quarter, and you think they're going to do 79. If you're bullish on Nvidia here, it's because you can envision a situation where $120 billion in revenue goes to $200 billion, and they have $5 a share in earnings power. At $16 a share, it's way too cheap for that reality. Now, if you don't believe that that's the reality, whether it's a year from now or 2 years from now, okay, fine. But if you do, that's why you're in the stock. As always, all eyes are on the guidance. So near 32 billion, near 32 billion in revenues is the guide, the expected guide. How much more than that is required for the stock to have what Josh would refer to as a big plus reaction? Yes, indeed. The buy-side rumors, in my opinion, are closer to 33 to 34, which would likely indicate a data center guidance of at least $30 billion. If you figure the other businesses are a few billion dollars, so they had guided 28 billion for this quarter. The street's a little higher than that, minus 28.7 or 28.8. The street's around 31 and 31.8, something close to 32 for next quarter. Bids probably looking at 33 to 34. Are you optimistic they're going to get to that? Yes. This is what's interesting, isn't it? So everybody's been wondering what the Blackwell delays might mean for this, and I actually think for Q3, it's probably not much of an issue. There wasn't ever going to be a ton of Blackwell revenues in Q3 anyways, and they're not going to guide the Q4 and beyond. Maybe we'll get some color on that. August was, of course, a volatile month for the Dow, S&P, and NQ, carving out gains, with the Dow and S&P hovering at fresh highs. As we prepare for a jobs report and potential Fed rate reduction, what will September hold for stocks? Joining us now, Fundra Global Advisors Head of Research and CNBC contributor, Tom Lee. It's nice to have you here, Tom. NANAF, I should clarify, will only have gains if it continues its strong session today, so it won't be significant net gains. Tom, fantastic to see you. Long time no chat. First and foremost, what's your reaction to how the market has absorbed Nvidia's numbers? Naturally, yesterday morning's pre-market saw the initial decline. It was going all right, and then it did shut more seriously down by the conclusion of the session yesterday. Well, I think Nvidia is one of the stocks that has become part of stock market lore. Almost everyone has a position, and I don't think the results in the earnings changed anyone's minds about AI and the central role it's playing in both global productivity, but also Nvidia's role. However, I believe that the sell-off indicates that a lot of positive news was already priced in. I think that's why the stock fell. It didn't take the larger market down. I think that was kind of a nice conclusion, and I think it just tells you that there's room for a lot of rotation, and I believe that it's exposing that tiny caps are one of the groups benefiting from that rotation. Let's talk about that rotation, Tom, and the extent to which there's still a long way to go if you're looking at the valuations of some of those sectors that haven't done so well in recent months and years, or whether things have bounced enough across the board that you start to get a little bit concerned about valuations for the entire market, not just Nvidia's. Well, valuations are obviously something our customers are asking us about because, the equity markets have been growing for several years, but the idea of a rotation, I think, is built on a variety of things. One is that the Fed's rate path is lower, and that supports cyclical stocks and small caps. And we know there's also a lot of capital on the sidelines, and investors are risk-averse because of, the yen crisis and just general fears about the summer. So I think the Nvidia numbers plus the Fed in September is really the spark that's going to push some investors to actually follow through with the rotation.